Good morning, traders. Like the video if you like it. Comments below are appreciated. Retweet me on X if you get a chance. And I will have it posted on StockTwits as well. Okay, morning video here, guys. So I'm starting with the Japanese yen this morning. So basically, when the yen is rallying up, okay, this tends to be uh, bearish on the over. It's not really bearish. Yeah, it restrictive on the upside in the overall markets, and that's what we have seen all week long. We've been digesting sideways all week. So this is what you call a rallying yen is an unwind of the carry trade. So basically, the international community, as the yen comes down, finances their debt in yen denominated currency, and they get paid as the yen comes down uh, for that debt. They benefit by the yen coming down. Well, we've seen since last Monday a big rally off the recent lows here in the yen, and so that is uh, a headwind for advancement in the equity markets. So be very mindful of that going forward here. Some things, if I'm just looking at the yen and some things that I'm looking at right here. 2 weeks ago, 3 weeks ago actually, we had a double distribution breakdown here in the Japanese yen. And so far this week, as of yesterday, we had an immediate rejection of this higher distribution. Came in, we wicked out on the 1 hour and could not push through that. Now that might resolve higher today, but something to be mindful of that. Now, this lower volume profile, as you can see, we got two major distributions that we traded off of last week. And right here, where these high volume nodes are, this is where smart money is hedging their bets. They're deciding whether or not, in a big way, to push prices higher or push prices lower. And ultimately, that just tells you when you break out of that one way or the other, that tells you which side of the coin ultimately won out on the move. Now, if you put a regression line right on that breakout point, okay, as you can see here, we came down, we broke, okay, uh, we broke the regression line, and we're currently doing a back test. Uh, So, in my opinion, what we've got going on here is a very weak rally. We're losing steam on this rally to the upside into this higher distribution. So, this could be supportive of the overall markets in today's session if this fails. So, be very mindful of that. Uh, so, let's see how that works out if we get a failure here. Uh, we are still in this week's high. They're still trying to decide which way to push this, and we are slightly on the bullish side of that early on this morning. So I want to see if you're going to be a bull today. I want to see this break down early on in the session. Uh, so right now, we'll see how it all plays out. But we have resistance above us that has proven so far this week to be a major headwind in the markets. So we'll see how it plays out. Okay. Ideally, you're trying to see price action. Let me show you right here, guys. Put another little rectangle on here. You really want to see price action accepted below this level. So that we just need to watch and make sure the yen starts breaking back down below that in today's session to be bullish the market. Right here, right now, very suspect that they're going to keep the markets higher in today's session until we actually start seeing that, this possibly breaking back down to the bearish side of this week's this higher distribution. Okay, so bottom line is big institutions are making big bets. And when we start pushing above that, that means these big institutions are starting to get paid in a directional move. So we have to be very mindful of that as we look forward in today's session. Another thing, the big futures contracts early on at 4:45 this morning. Um, Bottom line is the bond market, 10-year bonds are pushing above this high volume distribution. The weak high volume distribution, suggesting there's a slight risk off sentiment or risk on sentiment in bonds this morning. I'm sorry. possibly institutions were loading uh, for a directional move here in the bond market, which ultimately this morning seems to be pushing to the upside, suggesting yields could be coming down here on Friday. That could be a little bit more bullish in the markets. So let's definitely keep that one on watch. Okay, guys, our two main levels here on the Qs this morning. I'm bringing this up because your mini in Qs is the number 2 on volume early on this morning. Uh, on the daily right here. So we are right above the, so it'll be 511.40 is the market maker expected to move for the week to the downside. Okay, we do have a big put wall at 510. That's outside the expected move for the week. Okay, so be mindful of that. We also have one at 520, and that's right at last week's close. Okay, so there's two, those are our two major uh, inflection points for today. And I want to show you on the 4-hour how, let me turn that study off real quick too. Okay, zoom in here. Actually, I needed that MACD back on there. I'm sorry. I think market. Nope, it doesn't have it. Sorry. So my main takeaway here, guys, is that, here, 1 second here. Okay, guys, so on the 4-hour here, you see this trend channel I've got on here. Okay, so basically we're not breaking and pushing into any type of negative or positive gamma this morning on the Qs. And so the rule of thumb is the primary trend is up. We're coming into this major back test of this channel. So just be very mindful that, you know, the ideally this is a bull flag coming into major channel support back test for a potential leg higher. So we have to definitely keep that in the back of our mind. Technically, this is a bullish pattern, and you know there is nothing here on the NQs suggesting that we're in major jeopardy for a downside flush yet this morning. So I definitely want to point that out. The primary trend is up, so be very mindful of that, and uh, try not to get yourself too excited about going short in this morning's session. Okay, guys, the S&Ps are looking a little bit different. We have a massive put wall at 58.50, and we are, uh, awfully close to, testing that today. So be very mindful of that in today's session. If I put SPY on there now, okay, so we do 580 on SPY would be the big put wall today. Check it out real quick. So guys, we had the CPI news that came out earlier last week, and we're trading right at that where that data came out. That data dump came out on CPI, and having trouble getting past that. So let's be very mindful of that in today's session. This is a major, see that green line there, as a major trend support. We're still holding above it this morning. Okay, so bottom line is this is a bull flag until proven otherwise, suggesting that we needed to build a base here for potential move higher. So, the kind of, it is what it is, it's a bull flag until it's not. So, I don't want to get overly bearish until it proves otherwise. We had VIVIX yesterday, that's VOLVIX, VVIX. So we didn't break above 110. 110 is the real danger area here on the VIVIX. Showed a little bit of weakness into the close yesterday. So be very mindful of that. That looks a little bit more supportive of the markets. VIX this morning, down this morning. Okay. We got this downtrend we've got going on here. Extend to the right. We're still well inside the defined downtrend. So, that's kind of supportive of potentially buy the dippers here on the markets. So, yeah, there's a lot of things to think here that they may be trying to buy this dip today. So be very mindful of that. Okay. Um, Russell. Uh, Can't really see anything. Very critical breakout here. This is actually green now. We're doing it. We just did a very critical back test of this critical area. So this actually could be by the dip if they can support that low from yesterday. So be very mindful of that, especially we're seeing the bond market a potential. Okay, so we came right down to 2 week supply. They bounced right off of it this morning. We got some institutions putting their bets. This is exactly where you would think that they would be accumulating, not distribute. Just this is above a critical area, so this is an accumulation area in theory. Okay, it may not be ultimately, but I'm telling you, that's what it looks like to me, a potential accumulation area for a move back higher here in the Russell. So, uh, believe me, I'm a perma bear and I want to be a perma bear. But I think the biggest risk we have is that we move back into last Friday's close in today's session. So be very mindful of that in today's session. That is the call wall, the current call wall for today's session, right back into last Friday's close. So be very mindful that we could be getting a short squeeze in today's session, moving us back into that scenario. So I don't know. If you agree with me, please leave a comment below. If you disagree, I mean, if as long as you're constructive and not mean, please, tell me why I'm completely wrong about my assessment. I want to hear it because I don't want to be on the wrong side of the trade either. But I mean, personally, uh, unless something changes, that's what I'm seeing just for a 1 day scenario. Okay, so now I do have to say though, if we for some reason were to become again this morning, gapping down below the 58.50, causing a negative gamma squeeze, it could get ugly really quick, and there could be some news before the market opens to cause that, because two big reasons. We have some of the biggest leverage ever in the market currently, and the fact that we came off of the tariff lows to these highs, we have the biggest acceleration in leverage ever from Main Street. Okay, so there's two big factors that could just blow up at any moment. Okay, in leverage, and liquidity is the most important thing in the markets by far, and leverage is one of the big liquidity issues. And so if this thing starts to unwind, it can unwind in a very fast way. So we have to be very mindful of that scenario going forward here. Yeah. But bottom line is, technically, here at 5 o'clock in the morning, things still look supported. But by 9:30, that could all change. So there you go. Thanks a lot for listening.